Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Checking in on the market, we have further pullback and we're starting to see some cracks in the armor of the bulls. We have Netflix earning after hours and they are getting hit pretty darn hard, down big time, well over 10%. We'll see where we open up tomorrow, but the entire tech sector is down a good bit. QQQ down about 0.5% after hours. So this does put, now that it's a negative reaction for the tech sector, at least initially to earnings, this does put the daily uptrend in jeopardy. SPY is in the low 297s. So we're about $1.50 above our daily support level, but this is the size of the pullback where even if we do hold it initially, we have to be cautious of the head and shoulders pattern that indicates weekly consolidation is coming. So as we've been talking about in recent videos, we've been shifting a little bit, getting cautious up at these levels, and it does look like weekly consolidation may be coming. Again, we have not consolidated in 6-7 weeks. It will just be looking for a weekly higher low to form in this uptrend ever since that V-shaped recovery the last time we saw weekly consolidation. It's all about the daily uptrend for the rest of the week, essentially. And the hourly RSI is oversold, which is why I would not be surprised to see that support level hold, at least initially, on its first test. So that's the key level. And on the hourly time frame for SPY, anything under 299.13 is just an hourly lower high. IWM on the daily chart, we were watching this range that we've been trading within for 10 days. We finally broke it bearish today. So the question now is, can the bears get followed through on that break? Same thing here. We're looking at weekly consolidation underway. And I'm looking at the main levels of 161.11 resistance, the low of 145.32. So essentially we have the high, low, lower high was 158.03. And now we're scouting a weekly higher low in IWM compared to 145.32. QQQ, so we're going to expect the bearish reaction. Again, we're down at 191.20. So the daily higher low is 188.65. So again, I would be surprised if we were just going to fall down and break that level, as the hourly RSI is already in the low 20s. Essentially, if we were going to break this level tomorrow, we would have to see hourly RSI in the low teens, which is not extremely likely. So again, same thing, head and shoulders pattern, even if we do hold support, and on the hourly time frame, anything under 193.10 is just an hourly lower high. Financial sector pulling back. So the daily uptrend of 27.81 is a double low, but that's at risk of being lost. So now that the earnings cycle is over, well, now that the earnings cycle is well underway for the financial sector, it's now shifting focus back towards the potential rate cuts in July and what that would do to the financial sector. So the loss of the daily uptrend means zoom out to the weekly, and we're now looking to see, can the bulls hold 26.89 support, which would be a weekly higher low. So again, shifting focus from the daily charts, and once the uptrends are lost, then we go to the weekly charts and see, can the weekly uptrends be held. The healthcare sector was the first to lose the daily uptrend with a lower high and lower low. And so again, we zoom out to the weekly. XLV is looking for a weekly higher low compared to 86.77. A lot of space for the bulls to find that weekly higher low. And we'll see if they're able to do that sometime in the next few weeks. And anything on the daily chart under 94.15 will just be a lower high from here on out. Short-term support is 91.80 and 91.50. And the biotech sector broke bearish under its 85 triple bottom of support, almost a quadruple bottom. Didn't get a whole lot of follow through. So that on the weekly time frame is the potential of healthy consolidation, as long as the bears don't get significant follow through on those breaks. So again, just looking for a weekly higher low compared to 79.31. So we can stay in weekly consolidation mode for the rest of July. We have to be watching. Of course, I'm assuming we're going to lose our daily uptrends sometime in the next week of trading. We'll see if that takes place. That's criteria number one. But once that happens, then we are in consolidation mode on the weekly chart. And again, I'm going to stay cautiously bullish as far as a longer term perspective, as long as the weekly timeframes are held. But losing the daily uptrends, it's not just that easy look bullish and look to buy the dip scenario that we have been in for the last pretty much month to 6 weeks of trading. The VIX here had a green day, still in a tightening range, with our low of 12, high of 1470, higher low of 1220, and anything under 1470 is just a lower high, but bulls are hoping this is a falling wedge, which is a bullish pattern. And the falling wedge would be inability to break to significant lower lows, and depends on where you draw your resistance line here, but looking something along those lines. And if we reject and pull back and the SPY bulls maintain the daily uptrend, that's going to be notable to keep in this tightening range, but this is a pattern to be watching on the volatility index for the rest of the month, essentially. And we'll see if we're able to break 1470. That would be a bull break very quickly. But if we are unable to, I anticipate to stay within this into next week. So tomorrow will be a pretty big day as far as how much follow through we get here. Gold. So gold resistance is 1427, and we got right up to it, and we have not broken it yet. If we break 1427, we break this tight pattern bullish, but we have to ensure that we break the upper 1430s in order to get follow through on that break. So a good day for gold. Look at the miners. That is a much more convincing bull break, and they're still up. NUGT is up over 32 here after hours, even with the SPY weakness. But the bottom line is the miners are positioned much better than gold is, because gold hasn't even broken bullish. Meanwhile, NUGT has broken bullish by over 6%. So again, I'm still holding my swing position. This is probably the longest swing trade I've held in a while on NUGT. And as long as the daily uptrend on gold is intact, I'm going to keep holding this position. And it's a small position, but it's now up 20-some%. And that just shows you the power of these leveraged ETFs, where you don't have to have huge positions for swing trades to get follow through. So oil is pulling back as well significantly. Hourly RSI back to oversold, 4-hour RSI getting oversold. So I do anticipate we're going to hold the daily higher low of 56.03 at least initially. And we already actually bounced just above it, 56.19. That was a nice bottom fishing play. I missed that setup. But it's the same scenario where even if we do get some bounce follow through, we have to be cautious of the head and shoulders pattern here. And if we just form an hourly bear flag or a 4-hour bear flag and cool off that RSI temporarily, if we lose that support level, again, remember we're watching the monthly equilibrium, and I would be looking for the monthly lower high to be set if we break that $56 support. And then our focus shifts back to the monthly higher low of 50.59, and that then becomes the most important support level. Natural gas, to wrap it up, we've got a pullback. Again, natural gas and oil have been more correlated the last 3 days than I've seen recently. Same thing, I anticipate we're going to hold this support of 223 at least initially, but we have to be cautious with the left shoulder, the head, and granted, this is normally a bearish reversal pattern, a head and shoulders pattern from an uptrend, but you could say we have a clear higher low, higher high pattern, and that would be shifting from a lower high to a lower low if that is indeed how it plays out. Remember, we're looking at weekly consolidation now underway, and the question is, can we hold 215.6 and break 250 to change the weekly trend? But right now, the bears still have the upper hand of the long drawn-out downtrend in their favor for about 10 months at this point, and no sign of a significant shift to favor the bulls. So that's what we got for the market rundown. We'll see how the bears are able to respond tomorrow to these bearish Netflix earnings. Certainly seeing the entire tech sector taking a hit, and we'll see how much they're able to recover into tomorrow, if they are able to at all. So I appreciate you watching. And checking in to show the trading station now. So adding some plants out here to the space in the sunroom, and this will be ideal in the spring and fall. In the summer it's pretty hot, and in the winter it's going to get chilly, although there is a heater already out here. So I got this standing desk, and it's electronic, where you push your button and it goes up. So that's good for the back, and got a new chair, racing chair. This was less than $100. Certainly an upgrade for me from what I was previously using. Got a nice money tree. Got a little back massager that I throw onto my chair every now and again and get some back rubbing going. And it's got a nice view of the little waterfall and the bird feeder. And I watch a squirrel and a little chipmunk that lives nearby. He stuffs his fat cheeks every morning. So finding my happy place to ensure that I'm in the right mindset for trading. And out here, I'm going to, over the winter, take out a section of that grass and put a bunch of perennial flowers and try and attract some pollinators. I did see the first hummingbird out here yesterday. So attract some more pollinators and birds, and also probably put a fig tree and some blueberries out there as well. I also got some snail friends from the internet. I'm gonna stick those into the little waterfall to try and combat some of the green and red algae in there. We'll see how that goes.